Today, we are going to look at the state of the market, and the number one question on everyone's mind: has Bitcoin crashed? Have you missed the boat? If not, is now a good time to buy? The great news is that by watching to the end of this video, you'll definitely have a better understanding of the market and how to read the chart. Let me first crush the idea that Bitcoin has crashed and why now is one of the best times to buy. With that said, I wouldn't advise buying Bitcoin, but more on that later. First off, hi, my name is Malachi Kelly, and if this is your first time watching any of my videos, then welcome. Hit the like button now if you're a first time viewer. I've been trading the currency market for over 10 years and have never seen the volatility that we see in the crypto market today. Many traditional traders stay away from assets like this because it's too high risk. I understand their point, because if you're trading with millions of pounds, then the massive decrease in price seen since mid-December to date would have wiped out a huge portion of equity for their company. However, on the flip side, if you have between $1,000 and $5,000 to risk, you could potentially become a millionaire not too long from now. It has happened already to Eric Finman. The teenager has had some luck with the cryptocurrency growing up. At the age of just 12, Finman used $1,000 gift from his grandmother to buy his first Bitcoin, and by 18, he became a millionaire. He currently owns 401 Bitcoins, which equals 3.8 million at a rate of 9,500 a coin. Now, as we can see, the price of Bitcoin swings massively daily, so his fortune can go up or down. In 2014, rapper 50 Cent let people buy his album Animal Ambition using Bitcoin. He then left his account to lie unused for years, and only just recently discovered that he's now a Bitcoin millionaire also. 50 Cent raised $400,000 in Bitcoin from the sale of his Animal Ambition album. Later in this video, I'm going to show you how you can make more with far less invested. But let's now jump into this chart and show you why Bitcoin isn't crashing. Think of price to be similar to an elastic band. You can stretch it, and it will eventually snap back or break. Now, price is the same. It will stretch far from its average and then snap back. To my knowledge, the market has never broken. So with that said, the only logical reaction after the market is stretched is a snap back to averages. I have the averages drawn on the chart. The red line is the average price over 100 days. The yellow line is the average price over 50 days. And the black line is the average price over 10 days. So as a narration of the price action based on these principles, price shot up to 20,000 where the market was stretched. It then snapped back to its averages, and price subsequently went lower. However, the averages didn't cross. They touched, but didn't cross. And price is currently trading close to all the indicators. Now, I've always been taught to trade what I see and not what I think. Yes, price has come down massively, but it has not been able to break or go lower than when the buyers rode it up the first time, which is around this level. Since hitting that low, we have snapped back to near the averages, and the decline is slowing down. Professional swing traders don't sit at their screens all day waiting for the right time to buy or sell. They place orders in the market, so if price gets to X, then they will automatically sell me X units or buy me X units. Now, I haven't got a crystal ball, but I can guess that there is loads of buy orders between 7,000 and 5,000. So between here and here, traders would have placed orders to buy if price drops back down to here again, because we have seen an increase in price both here and here in the past. So you can imagine if price is down here again, we should see it go up another time. So all of the buy orders that are down here, they'll keep the market supported if price does return back to that level. I don't think it will in the next couple of days or weeks or months. We're looking at what I would determine as one of the biggest bull runs of the stock market ever, and even bigger than the dot-com boom of the 90s. Not only that, but to buy any other crypto or altcoin, Ripple, Litecoin, Dash, Monero, you still have to first buy Bitcoin, Ethereum, or Bitcoin Cash. If you watch until the end of this video, you'll understand why this is so important to the market. But finally, if you invest in the physical coin, it is very hard to actually get your money back. So in essence, your money is stuck in Bitcoin for now. Now as we move into the future, it'll be very easy to sell your Bitcoins or whatever coin you have to the bank, and they'll give you back your cash. But currently, it's quite difficult. There are ways to do it, and I have done a couple, but as I'm an investor for the long term, I have my coins on my Nano S in my cupboard, and they're sitting there until it's going to be easy to sell. In technical analysis, Fibonacci retracement is created by taking two extreme points, usually a major peak and a trough on a chart, and dividing the vertical distance by the key Fibonacci ratios of 23.6, 38.2, 50%, and 61.8%, and then finally 100%. Now, I've seen these Fibonacci's play out time and time again on all different charts, Forex, stocks, bonds, even volatility charts. The Fibonacci numbers seem to play out. Fibonacci was an amazing character. You can go and do your research on Fibonacci and Fibonacci numbers, but they're used in lots of other stuff as well as just trading. But generally, when you're looking at Fibonacci numbers, after a decline in price or an increase in price, we see what we call a reversal or a correction. Now that is where people are taking their profits from the market. So they've bought in or sold at a low or high point. Prices moved in their favor as much so they've been able to realize a profit, and for them to realize that profit, they need to close their position. By closing their position, if they bought, they now sell. If they sell, they now buy and realize that profit. And that's what's been happening in the Bitcoin market over the last couple of months. People bought in last January, rode the price all the way up to 20,000 in December, and started closing all their positions to realize the profit. But how do you know when people have realized all their profit? And that's where the Fibonacci numbers come in. And it's like they're some sort of magic that tell you where price is going to go. So we generally see a pullback to either 38.2, 50, or 61.8% fib. Then the instrument returns to the previous trend. However, if we break through 100%, the trend has now reversed. Let me illustrate that on this chart for you. Now, if we fib the previous move from the low to the high, when you draw fib levels, make sure you always go from left to right. So, from left, so we'll go from the previous uptrend. So we'll go from the low to the high, and that draws us out our Fibonacci retracement. As you can see, when price hit 38.2, there was a sharp decline to 61.8, which is down here, where price then pulled back and struggled inside the fib levels for about a month and a half. So between 38.2 and 61.8, we were in that range from around here to here. It's about a month and a half It then broke the 61.8 at the end of Feb and made a lower low. So here was the low before, and it made a lower low, which was down here, which meant the market was still going down. Now after this lower low, it then got very close to the beginning of the move before moving back to the 61.8 fib. Okay, now let's fib to decline to see where price is today. Let's get rid of this one. So there we fibbed from the low to the high. Now we're going to fib from the high to the low to see where price is today. Remember, left to right, high to the low, and as you can see, as if by magic, price bounced off zero, pulled up to 38.2%, and then reversed. But I'm not buying into further downside pressure and have increased my positions further. I would rather secure a price under the averages than wait for price to break 61.8 fib or even 100% where I could be buying right at the highs. Let me show you one more thing to prove that this market is supported, and then I'll reveal how you can get your feet wet in this crypto market. So if we draw a horizontal line where price is now, around about here, we will see that price has been here before, here, and bounced off and saw a massive increase in price. Here again, when price broke through the 61.8 fib and then declined to this line again and bounced off. So in essence, each time it's bounced off this level, except this one time where we broke below for 12 days. Even to buy Bitcoin at this level, if you only have $200, is not really that exciting. Say you invest your $200 today on Bitcoin and it goes up to 100,000 per Bitcoin over the course of 2 years. You would have now made $2,000 in 2 years. Good, but not exciting. As you can see, I've been buying Stellar, or XLM for short, as the market has been dropping. My best price was 0.3516, and it's still going down. So if you get involved today, which is the 26th of Feb, you could get a price of 34 cents or even lower. Now if price on XLM goes to just $100, your $200 investment becomes $58,823. Which is more probable? Bitcoin going to $100,000 per coin where you make just $2,000, or the Stellar price increasing to just $100 where you make just shy of 60k. Click the link below this video and it will take you to a page on my site where you can subscribe and follow my journey as I march on to 140,000 target from a starting balance of just $1,687. Click the link below and I'll give you step-by-step instructions on how the eToro platform works, and if you'd like to invest your $200, I will give you all of the steps involved in creating your account and buying your first cryptocurrency. So thanks for listening today and happy trading.